You make more money right now than your parents ever did at your age. You have the title, the zip code, and a car that turns heads. But if your paycheck stopped tomorrow, you would be completely broke in less than 60 days. This is the high-income poverty trap. It is a cycle where every raise is immediately swallowed by a new obligation, leaving you with a higher salary but no actual wealth. Welcome to Minted Mosaics. Today, we are breaking down the mechanics of this trap and the specific strategy you can use to reclaim your cash flow, starting with a simple allocation of $1,000. A high salary doesn't guarantee security. Without a change in your financial operating system, a larger check simply makes you a more profitable client for the bank. Think back to your very first job. You survived on a fraction of your current earnings. Why does your six-figure salary feel just as restrictive as that first minimum wage check? This tension is caused by Parkinson's law. In personal finance, this principle dictates that your expenses will always expand to match your rising income. When you receive a raise, you likely feel you've earned an upgrade. This leads to a larger apartment, a newer car, and more expensive weekend habits that immediately consume the surplus. The math of lifestyle creep is unforgiving. Financing a $60,000 vehicle doesn't mean you possess $60,000. It means you owe that amount to a lender, plus interest. Society often rewards the appearance of wealth over the actual presence of it. This keeps high earners on a financial treadmill, forced to run faster just to maintain their current position. Many professionals focus on the wrong metric when measuring their progress. Relying solely on net worth can create a false sense of security. Net worth looks impressive on a balance sheet, but that value is often locked in illiquid assets, like home equity or retirement accounts that you cannot touch for decades. This is why liquidity is essential. It represents the cash or assets you can access instantly without penalties or market friction to cover your immediate needs. In a crisis, expensive clothes or luxury goods cannot pay the bills. Without liquid reserves, high earners remain vulnerable to minor financial shocks. A high burn rate, the total cost of your monthly overhead and debt, creates constant anxiety. You are essentially one missed paycheck away from a total collapse. Breaking the trap requires aggressively lowering that monthly cost and prioritizing accessible cash over illiquid vanity assets. The transition begins by taking your first saved $1,000 and moving it away from consumer liabilities into assets that generate value. You don't need specialized access to begin. Index funds provide a straightforward entry point into the global markets. Think of an index fund like a grocery store. Instead of betting on one apple that might rot, you buy a piece of the entire store. If one company fails, the growth of hundreds of others moves the portfolio forward. By holding these funds, you move from being a consumer who pays for products to an owner who collects a share of the profits those products generate. You can access these markets through ETFs, or exchange-traded funds. These are bought and sold through standard smartphone apps, like any individual stock. An investment in a total market ETF gives you a real, fractional ownership stake in foundational tech companies and hundreds of global manufacturers. The primary utility of this capital is the generation of passive income. Eventually, your investments provide the cash flow necessary to reclaim your time. Every dollar you invest works 24 hours a day. Its only function is to go out and recruit more dollars through the power of compounding. As you stop inflating your lifestyle and let these assets compound, the resulting passive income begins to cover your monthly overhead. You gain the ability to work because you choose to, rather than because you must. To see the specific ETFs you can use to start this portfolio today, click the video on your screen. We'll break down the exact funds that help you transition from high-income poverty to actual wealth.